worried about the future, which has resulted in a fall in the value of stock investments. Thankfully, though inflation looks to be falling, suggesting the Fed may postpone rate hikes for the time being, the financial markets are pricing in another raking. Regulators this time approximately 0.5 percentage points or 50 basis points. Christopher Waller, a governor at the Federal Reserve, has declared that he is now confident enough in the strength of the economy to support a plan that would raise interest rates by only 50 basis points. The Federal Reserve has stated that inflation is lower, which decreases the anxiety. Larry Brainard, the vice chair of the Federal Reserve Board, recently voiced hope and suggested that it is likely that the Fed will immediately pause its interest rate hikes as a consequence of recent inflation numbers showing slower price increases in the United States. Cathie Wood has supplied Tesla with optimistic comments on the capabilities of the company to grow its energy in AI robotics industries. He says that the only industry to enjoy expansion in 2022 was the energy company, which saw a rise of approximately 50% during that era. Tesla is currently seeing an incredible expansion in this market. According to the company's reports, the Tesla Energy division had a considerable expansion during the third quarter of 2022, resulting in record sales and energy storage installations. The sum of $1.117 billion was total of 8 Tesla's energy sales, which increased by 38.6% year over year. Although Cathie Wood predicts the rising inflation would eventually destroy most of the industry's competitors, she also predicts that most people will select electric automobiles, leading to a dramatic drop in oil usage very shortly. Although she cannot see into the future, of course, she believes the EV industry is growing rapidly, and that several events point to the direction in which the future of EVs will go. In that direction, it's only upwards in terms of popularity as demand rises and prices fall, which predicts the EV market will grow from $287.36 billion in 2021 to $318.22 billion in 2028 after a dip in sales around the year 2020. Due to the pandemic, the years 2022 to 2024 are expected to be the most promising for sales of electric vehicles. This is doable with present regulations and government support. Thus, it's no exaggeration to state that Cathie remains unshaken in her conviction about Tesla. In an interview last week with Yahoo Finance, ARK founder and CEO stated she was not concerned about Musk's leadership at Tesla. Goldman Sachs also gave another blow to Tesla earlier this week when the bank dropped its price target and lowered projections on tested deliveries and gross margins for the fourth quarter, presenting the specter of deteriorating demand. Goldman maintained its buy reading and remains positive over the long haul. ARK, like Goldman, remained confident in the company's long-term delivery prospects, but he highlighted to the loosened supply chains that positioned Tesla at the vanguard of being able to drive down costs and pricing to help bring electric vehicles to the mass market. Wood told Yahoo Finance that Elon's main function at Tesla right now is bringing it towards an autonomous taxi platform, which I think will happen in 2024. I guess he expects it will happen next year. I think he's as focused as ever as he's been on that. Cathie is a stock market fanatic, and her firm, ARK Investment, has returned millions to its backers. Cathie reportedly projected that shares would be valued $4,600 by 2026, and by 2025, she anticipated the stock price of Tesla would reach over $3,000. Cathie, I agree it's been a poor year for the stock market, but for her, the perfect moment to buy is when equities are priced at a discount in bear market territory. Do you agree with Cathie Wood's choice to expand her shareholding? Share your opinions in the space offered below, and then watch the next video to find out Tesla's most recent attempts. Thanks, and don't forget to press that like button and subscribe. I'll see you in the next video. Tesla investors are feeling the burn, and if you're one of those stockholders right now, you might be cautious to purchase the dip and make more investments. It's true that most investors would rather keep their money safe in the bank or sell their stock than see their asset prices fall steadily over time. Here's what the average investor thinks. I'm not here to talk to you about normies, but to tell you what the renowned Cathie Wood has to say on the topic and why those who follow her advice will certainly make the big money. So sit tight, relax, slam the like button, and subscribe. Cathie Wood argues that investors in Tesla are justifiably apprehensive about the stock market and Tesla stocks in particular, but that now is the time to enter these markets and stock up on shares. Just what is it about this possibility that makes it a once-in-a-century chance for investors and you based on Tesla's average trading levels between October 3rd and December 20th, 2022? Cathie Wood's investment management business ARK Investment went on a dip buying spree, purchasing $88 million worth of Tesla equities during that period. The corporation has a history of buying during the downturn. She disclosed in October, through the flagship ARK Innovation ETF, that she had purchased 66,190 shares in EV, despite though the Tesla stock price had declined by 60 since the firm went public a decade ago. Cathie Wood has opted to boost her stake in the company's $6.7 billion. Flagship fund ARK Innovation ETF Tesla is our third largest investment. However, Wood is sure that Tesla stock will rebound shortly. Why is Wood purchasing more shares? At this time, we'll get into it more and more as we move through the video. But if you're like this sort of thing, remember to like, subscribe, and enable notifications. Cathie Wood adds that expected developments in robotics feel like they have been noted by investing gurus as factors that test performance and stock price. May boost future growth at Tesla might be fueled by AI and renewable energy. Cathie would anticipate that by 2023, when inflation will have reduced and new ideas would be contributing components, there will be huge market returns for these enterprises, promoting a tremendous accumulation of wealth for these firms. Deflation, according to Cathie, will also foster creativity as a result of deflation. Innovative goods and services will improve, which would predict trouble for the car industry after the self-destruction of innovation brought on by deflation firms that are managing their stock portfolios with minimal long-term investment in the case of commodity deflation, when inventories are deflated. May struggle to face the new market challenge, and automakers with goods that will become old will have to sell their shares and commodities at a cheaper price or risk suffering a substantial loss. According to Cathie, the projected deflation would only be able to be withstood by enterprises who have a competitive advantage in terms of innovation. According to her, when there is a slowdown in economic development, there is a greater focus placed on businesses that can be successful in any market. This is not the first instance of its kind. Stock Investor was persuaded by Cathie Wood's concerns about deflations in 2021 to believe that it represents a larger risk to the economy and financial markets than inflation did. Since Tesla is committed to innovation, the manufacturers shouldn't have any trouble with this. According to Cathie Wood, interest rates have the potential to have a significant influence on the price of Tesla shares in the future. The market is preparing for the possibility of a rate decrease coming from the Fed shortly. Both the economy and the stock market are suffering from historically high interest rates, which are likely to continue rising to levels that we've never seen in prior pasts. Elon Musk tests the CEO, and the creator has already suggested his conviction that the latest price hikes are to blame for the company's dropping stock price. The increase in interest rates has made investors